Good morning, morning. It's Friday, the 21st of March. It's also quad witching day for markets. For get your witch's broom out. It's me and Michael Brown doing the morning blast, where mainly Michael, will be giving an explosive daily preview. But before he does, let's get the legals out of the way. So, as usual, nothing discussed in this Spaces session constitute trading or investment advice or infers any kind of endorsement by PIQ Global Limited or PIQ or PLC Suite, or indeed that of the hosts, which, as you know by now, is myself, Mr. Ryan Paisley, and Mr. Michael Brown. Mr. Michael Brown, are you in the office today, or are you making cups of tea for builders?
Good morning, Ryan. Good morning, everyone. I am at home, but no scaffolders. They've
Ah,
gone,
two in a row.
sadly.
Zach, are you hearing this? Two in a row. Two in a row. He's working from home.
Well, I mean,
Game's gone.
I was going to say I've got a bone to pick with Zach because it's 9:30 in the Alps, and he's only just posted his overnight roundup. What the hell's he been
Tell me
doing all
about it.
morning?
Tell me about. I
Absolute
was. I.
disgrace.
I was getting flustered. Anyway, what's happening?
What is happening? Good morning, everyone. Happy Friday as well, of course. It was a relatively choppy but ultimately risk averse day for the financial markets yesterday as fallout from the March FOMC decision continued, and we also digested another three policy decisions across the G10 universe. As a result, equities, as I said, trading in slightly indecisive fashion, but ultimately ending the day with losses. The S&P 500 down by around 0.2%, the Nasdaq 100 down by about a third of 1%, and we see futures leaking lower again in early trade this morning. That subsequently put a little bit of a bid into treasuries, although those gains did pair as trade progressed, with the 2 and 10-year yield both ending the day pretty much where they started at 3.97 and 4.22% respectively, which is broadly speaking where we trade this morning. Of interest, though, we did see the dollar attract a little bit of haven demand. The greenback trading north of 104 yesterday and holding those gains into trade this morning. A little bit of a change from the recent dynamic where the dollar hasn't really been attracting those haven flows. We did, in fact, see the dollar attracting a little bit of demand yesterday, and that in turn saw cable trade about a third of 1% lower, and we've lost another third of 1% in early trade this morning. And regrettably, it also saw the euro soften by about half of 1% on the day, testing the 108 figure to the downside as my lunch seems to drift further out of view. In terms of fundamental catalysts from yesterday, moving very swiftly on from that, we obviously had decisions from the Swiss National Bank and the Riksbank, which we covered during the blast yesterday. We did, though, during the session yesterday hear from the Bank of England, who delivered probably about as dull a decision as they could possibly muster up, holding bank rates steady at 4.5% in what was an 8-1 vote among members of the MPC, with just external member Dingra dissenting in favour of a 25 basis point rate cut. That was marginally more hawkish than some participants had been expecting, but failed to put a sustained bid into the pound. The BOE's guidance was very much unchanged from that delivered after the last meeting, reiterating that they will continue to take a gradual and careful approach to further monetary policy easing, with a focus remaining on the risks of inflation persistence. And of course, they are sticking with a meeting by meeting approach to future policy decisions. Incidentally, market pricing for the BOE pretty much unchanged on the back of all that, about a 2 in 3 chance of a cut at the May meeting, with about 50 basis points in the curve by the end of the year. In terms of other things for market participants to get their teeth into, yesterday we did have plenty of data out of the United States. Initial jobless claims at 223,000 in the week to the 15th of March. That's as near as makes no difference, unchanged from the prior 220,000. But of course, that print does pertain to the March non-farm payrolls survey week. Continuing claims, though, a little bit soft for the week before that at 1.892 million, up from the prior 1.87 million. We also had manufacturing figures from the Philadelphia Fed, which marginally beat expectations at 12.5, up from the 9 consensus expectation, and existing home sales, which topped the forecast range at 4.26 million in February, up from the prior 4.08 million. In terms of other catalysts worth mentioning, of course, it was a day with a Y in it. So we heard from President Trump. He was signing some executive orders yesterday, which are aimed at closing down the Department of Education in the United States. I'm not entirely sure on the context around this, but at first glance, that seems slightly ridiculous, but we will see what happens there. Trump was also
Trust the process. Trust the process.
whatever the process is, clearly to make people even dumber than they already are. But we'll see what happens. Trump, while he was doing that signing, he also said that the US and Ukraine will be signing the rare earths deal, and I quote, very shortly. Obviously, not that shortly, because he said this at 5 o'clock London time yesterday evening, and to the best of my knowledge, they still haven't actually signed it yet. But one to keep on the radar. Sticking with the United States, we heard from the US Treasury yesterday. Yeah, again. um, we heard from the United States Treasury Department yesterday. They updated some sanctions relating to Iran, and crude caught a bid on the back of that. WTI up by about 1.5% yesterday and trading back above $68 a barrel once more. Here in Europe, sticking with the United States just very quickly, for the tech-focused folk out there, the information reporting yesterday that Apple, their losses on streaming are now greater than $1 billion a year. So you wonder when, or indeed if, Apple will give up on that. In terms of on this side of the Atlantic, of course, a couple of things worth bearing in mind. Firstly, Bloomberg sources reporting yesterday that UBS are potentially considering moving their headquarters away from Switzerland. UBS, and every Swiss bank actually, are going to be put under some very, very punitive capital requirements. For UBS, this would require them to hold an extra $25 billion worth of capital as a result of all sorts of banking regs that the Swiss are updating. And fair enough, UBS are saying, well, if you're going to do this, it's going to make us so uncompetitive compared to our global rivals that we are not going to be able to stay here and operate in this sort of environment. Obviously, the context around this is important because UBS and the Swiss government are not exactly best of friends, given that they were forced to buy their arch rivals Credit Suisse 2 years ago to prevent them going bankrupt. So it'll be interesting to see how this one develops. Here in the UK, quite a lot actually to cover off this morning. The first is, I'm sure people will remember what was going on with the LME and nickel a few years ago. They've been slapped with a fine of about 9 million quid from the FCA for supposed failings in how they dealt with those shenanigans. In the here and now, news that is, well, worth bearing in mind for pretty much everyone across the globe, to be honest with you, is that Heathrow Airport. Oh, go on. There seems to be a bit of a
I was just
delay
going to say
here. I
about
don't know what's going on.
yeah. No, I've got very bad reception, but I was going to say about the LME. That is pitiful, that fine, because there was massive failings that they had. They didn't rectify the issue when it happened as well. It was a proper absolute balls up, and I genuinely think that that's a very, very small fine for them. And I do think that the reason it's such a small fine is because it's the LME, and basically it's England's only hope at a metals exchange.
Yeah.
I think if it was anyone else, they'd been absolutely thrown to the wall. But yeah, anyway,
No, no,
sorry.
no. I think you're right on that one. I mean, it is an absolutely tiny amount considering the huge cock up that they made of the whole situation without wanting to put too
Yeah,
fine a point on it. I think they've got away with effectively a slap on the wrist there.
yes, yeah.
Anyway, moving on from that, news that is actually going to have a global impact is that Heathrow Airport is going to be closed all day. There's been a big fire next to the airport, which has knocked out a load of power, not only at the airport, but also in the surrounding area. So likely to cause a little bit of turbulence for the global travel sector. And we've seen
Oh God.
airline shares take a little bit of a leg lower as a result of that this morning. If you are traveling, then just be prepared for it to be chaos, probably for the next week or so as everything gets back in the right place. And a couple of updates on the statistics front from the UK this morning, just to show you how much of a shambles our national institutions are. Firstly, we had February borrowing figures. The budget deficit in the period from last April to this February now stands at a whopping £132.2 billion. At this stage, the OBR forecast that budget deficit would be at £111 billion. So just the 20% margin of error from the esteemed folk at the Office for Budget Responsibility. And as if
They're getting better.
well, yeah, I was going to say that's actually quite good for them. That's the worrying bit. And as if that wasn't bad enough, I need to have another rant at the ONS, the Office for National Statistics. Of course, for the last 2 years or so now, the ONS have been unable to provide us with accurate data on the state of the UK labour market. Last week, the ONS said that they can't provide us with data on UK trade because they've identified errors within the data set. And now they tell us that they can't give us data on inflation either. They are to pause the publication of producer price inflation data because guess what? They found errors in that as well.
Oh, colour me
It's
shocked.
an utter farce what's going on down there in
Right, so
Newport at the moment.
was it last week or potentially earlier this week when I kind of jokingly said at this point I trust Chinese data more than ours. That was a joke at
I don't
first.
think it is
I'm now
now.
thinking it's all exactly right.
Yeah, it is becoming
Shambles.
an absolute shambles. It is a laughing stock. We do get the latest UK inflation figures next Wednesday morning. The ONS have said they're going to publish CPI, which is of course what everyone watches. Whether they do, whether it's accurate, God only knows at this point. But it is a serious problem. I know we're joking about it. It is a serious problem because we are dealing with an economy where you've got monetary and fiscal policymakers who are trying to set interest rates and set fiscal policy, but we don't actually know what's going on within the economy. So as much as I'm happy to sit here and slag off the Bank of England and Rachel Reeves and everyone else as much as the next person, but in all seriousness, they are dealing with a very very poor hand of cards because you're trying to make policy, but actually unemployment could be anywhere between 3 and 6%, and the same can be said for
Yeah.
inflation. And how are you meant to accurately come up with policy ideas in that environment is beyond me.
I think the only upside is that Rachel Reeves wouldn't know what the data meant anyway.
Well, there is that, yes. And she doesn't have a Bloomberg terminal to look at the data either. So,
Well, at this point, good.
well, yeah, true. But after that little sort of mini rant, that's it. That's all from me for now.
Perfect. Well, thank you for that mini rant, Mr. Michael Brown. So as usual, some headlines from our dear friend Zach from the Overnight News Roundup. Zach, of course, is on holiday because as Michael says, there's a Y in the day. Um, I think he's somewhere in France at the moment skiing. But before we dwell too much on his social life, let's crack on with some headlines, but some choice headlines from the Overnight News Roundup. So, starting off with macro and policy. Chinese US trade minerals. The US Senator Steve Daines will visit China to revive stalled talks set to meet high level Communist Party officials ahead of the global corporate summit in Beijing. Trump is to invoke emergency powers to boost domestic production of critical minerals, countering China's dominance in the sector. Trump's Fed remarks, he reiterates calls for interest rate cuts, pointing to a drop in egg prices and energy costs. I'm not sure he understands what's going on there, but there we go. Federal agencies must now share more data internally, especially unemployment figures per Trump's new directive. A federal judge has temporarily blocked Doge or Dodge. What we calling it? Is it Doge or Dodge?
Well, I
Doge,
believe
right?
it's Doge because it's after
Doge.
the
Oh, the coin,
crypto
of course.
coin
Yeah,
currency thing, isn't it?
yeah,
You
that's
can
the
tell
one.
that
Yeah. So
that's my
federal
area
judge.
of expertise, obviously.
Well, mine too. Temporarily blocked Doge staff from accessing personal data at the Social Security Administration, calling it an illegal fishing expedition. And markets and flows. European investors in US stocks face dual losses, falling share prices, and a sliding dollar, and a recent virtuous cycle, according to the FT.
I was going to say, there's no way
T
that
Rowe
Zach came up
price.
with that on his own.
No, no, or me. T. Rowe prices sees Germany's defence-driven borrowing fueling broader inflation worries, predicting US 10-year yields could push towards 6%. In Japan, core inflation hit 3% in February versus 3.2 prior, with a sub-index excluding fuel accelerating. Services inflation eased to 1.3 versus 1.4 previously. JGBs, their yields nudged higher, topics at an 8-month high. Financials gained on stronger data while the yen weakened. Obviously, also we had reports earlier on in the week that Berkshire Hathaway were lumping into more Japanese trading houses. Households in Japan, their cash holdings fell at the fastest pace on record due to cost of living pressures. In China now, Stocks slumped on Friday, extending losses on a lack of new catalyst post rally. Plans to add a strategic reserve of cobalt, copper, nickel, and lithium are in play, so keep an eye for those metals. The PBOC backed media suggests no urgency, quote, no urgency, for LPR cuts as the policy stabilizes momentum. And apparently, a record 3 million restaurants shuttered in China in 2024 amid price wars and frugal customers. What else we got? Oh, it appears that my thing
No,
hasn't uploaded properly. So one second. Hang
oh, I
on,
was just
give
saying
me
I
a
can still
second.
hear you, Ryan, but
No. My kind of synopsis kind of thing on ChatGPT failed me. Geopolitical: Trump administration is seeking new terms for U.S. access to critical minerals, as Michael said earlier on, and energy assets in Ukraine. So pretty much everyone's expecting some quite significant headlines over the weekend, so gapping risk applies. Trump, in a Truth Social post, denied reports in the New York Times that the Pentagon was going to brief Elon Musk on US plans for a potential war with China. Europe's biggest military powers are drawing up plans to take on a greater responsibility for the continent's defence from the US, including a pitch to Trump's administration for a managed transfer over the next 5 to 10 years in order to avoid chaos of a rapid unilateral withdrawal from NATO. And finally, for geopolitical news, Iran's Supreme Leader Khamenei, or whatever we're calling him, said Americans
expert
should know that.
Persian pronunciation there. Well done, mate.
Exactly. Said Americans should know that they cannot reach a result in confronting Iran by using the threat method. Said if the US do something evil to the Iranian nation, the Iranian nation will receive a strong. Sorry, the US will receive a strong slap. In equities now,
What?
but look. Oh, I was going to mention about throwing sandals, but that would just be rude, and I'm not going to
That
do
was
that.
also Iraq,
Um,
but never mind.
yeah, no, but same region,
Oh,
same region.
oh
Look,
no!
one
Oh,
one
let
letter
move
out.
on. We're going to cause
One
a
letter out.
diplomatic incident if we're not careful.
One letter out. Come on, give me a break. Elon, in just one headline well, a couple of headlines in equity space. Elon Musk in a Tesla presentation urged investors to hold on to their shares. No shit. Meanwhile, Tesla announced it has begun to explore exporting its first mega pack battery from its Shanghai factory, and FedEx, who are failing to deliver, cuts
Deary
its
me.
outlook for the year, citing soft. Oh, come on! I learnt from the best. Cuts its outlook for the year, citing soft demand for business to business shipments as a result of continued weakness and uncertainty in America's industrial economy. And finally, for me, Rio Tinto wants to increase its investment in the US, probably to appease Trump, especially in copper. Obviously, we know about the copper prices. Not that we're getting back into that thread that we
Oh
made
no.
yesterday, but obviously copper prices in the US rocketing versus their London counterparts. But Rio Tinto want to invest in the US, especially copper. The head of the company's copper business said after President Trump signed an executive order to streamline permitting processes and boost government financing for the minerals projects. And that's it from me. Back to you in the studio.
Very good, thank you, Ryan. In terms of
Thanks,
today,
Rich.
then, of course, as Ryan has alluded to, there is obviously the potential for gapping risk over the weekend as we continue to monitor what's going on the geopolitical front. It is also, as Ryan said again, quadruple witching, which is technically triple witching these days, which is for those who are unaware, the simultaneous expiry of US stock index futures and options, as well as single stock options in the mix as well. So do bear that one in mind as we move through the remainder of the day. In terms of scheduled events, though, the data docket is very, very light indeed, mercifully, as we move towards the weekend. The European session sees nothing of any particular note, and then moving into the afternoon, we have the latest retail sales figures out of Canada due at 12:30. Sales expected to have fallen by 0.4% on the month in January, down from the 2.5% increase that they saw over the festive period. Of course, StatCan will also give us their flash estimate for February sales along with that release. And then at 3 o'clock this afternoon, We have preliminary consumer confidence figures from the Eurozone. This data referencing March, with the index expected at -13 for a prior -13.6. In terms of other bits and bobs today, we are due to hear from the ECB's Escriva this morning. And then do bear in mind that sadly today is the end of the Fed's blackout period. So all of them will be queuing up to get in front of a microphone, I would imagine.
Boo.
Thus far, we have the Fed's Goolsbee scheduled to appear on CNBC at lunchtime, and then the Fed's Williams will be speaking at about 1 o'clock. He's speaking in the Bahamas. What a gig he's got there! But do bear in mind that obviously a few other Fed speakers may pop up throughout the day.
Well, we shouldn't laugh because give it a couple of days and Zach will be over there.
Well, yeah, that's very true. I'm not sure you do much skiing in the Bahamas, but Judith will
Well,
find a way. And that's pretty much it from me this morning. Of course, be aware Trump Tate bombs could be lurking around the next corner, and obviously watching what's going on geopolitically as we move through the weekend. But yeah, that's your lot for today and for this week.
perfect. Well, Mr. Michael Brown, thank you as always for an amazing week. You're just a rock star. We all know it. Not many people say it, but I will to your face. But thank you, thank you so much, listeners. Thank you as always for tuning in, especially our regular listeners. We really appreciate you. And that's it from us. If you are trading today, keep it tight. Over the weekend, have a wonderful weekend. Stay safe, and we'll see you all on Monday.
Bye
Goodbye.
for now.